And you found that the S&P goes sideways, gold goes sideways, real estate goes sideways, roughly. The Nasdaq goes up, and Bitcoin does that. Okay, so now you've got two assets, only two assets in the world that outperform the debasement. Tech stocks, we get it, tomorrow is more digital than today. Of course they're going to do well over time. And second is Bitcoin. So you divide one by the other, and the Nasdaq's down 99.97% versus Bitcoin. And once you see it like that, and you realize it's all driven by one cycle, which is one dominant factor of debasement, then it makes it really easy, which is just own the one asset that outperforms.
The U.S. Federal Reserve is expected to begin cutting interest rates in September, as signaled by Fed Chair Jerome Powell at the recent Jackson Hole Symposium in Wyoming. Powell hinted that the time has come for a policy shift, with most analysts predicting an initial quarter percentage point rate cut, followed by 2 more cuts in November and December. This adjustment in Federal Reserve policy is likely to have a global impact, with other central banks expected to follow suit, leading to an expansion in global liquidity. Renowned macro analyst Raoul suggests that this liquidity expansion will allow central banks to monetize previous cycles' interest payments and roll over massive debts. Powell and his team at Global Macro Investor forecast that an increase in the ISM within the next 3 to 6 months will provide essential support for risk assets like cryptocurrencies, initiating the early stages of what they term the banana zone. A weakening dollar, alongside declining interest rates, is expected to ease financial conditions rapidly, improving the economic outlook. Powell believes that while all assets will benefit from the Fed's policy change, cryptocurrencies and tech stocks will vastly outperform the broader markets. He is heavily investing in the cryptocurrency industry, not just for 2024 and 2025, but for the next 6 years, leading up to what he calls the exponential age. Powell elaborated on his views and the future of the global economy and cryptocurrency industry in a recent interview with Mark Moss. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
They're all correlated. Some lead, some lag a bit, but they're basically all correlated to the business cycle. They always have been. But if everything is being driven by this one dominant factor, which is debasement of currency, and your hurdle rate is, let's say, 8% debasement plus 3% inflation or something, 11%, call it 12% for easy maths, on a globalized level. So unless you're making 12% returns, you're not going anywhere. Then at Exponential Age Asset Management, the asset management firm that I co-founded, we have this table of all of the different assets. And basically, the S&P is about 12%. So owning equities, which is why all of the millennials who have 401ks and they put it in the S&P still can't afford a house because they're just matching the debasement. They're not beating it, right? So they're not getting paid for locking up money for extended periods of time. The Nasdaq, about 17% a year since 2011. Okay, so the Nasdaq, because it's a secular technology trend, outperforms. Makes sense. And then you've got the bizarro world of Bitcoin, which is 150%. Gold actually doesn't beat it. Gold's about 8 or 7. So you're actually worse off in gold than you are owning the S&P 500, which is why that ratio keeps moving. So Bitcoin makes such a dramatic difference. So all I started doing was then dividing every chart by the total global liquidity, or even the Fed balance sheet, or M2, whatever you want to use, right? And you found that the S&P goes sideways, gold goes sideways, real estate goes sideways, roughly. The Nasdaq goes up, and Bitcoin does that. Okay, so now you've got two assets, only two assets in the world that outperform the debasement. Tech stocks, we get it, tomorrow is more digital than today. Of course they're going to do well over time. And second is Bitcoin. So you divide one by the other, and the Nasdaq's down 99.97% versus Bitcoin. And once you see it like that, and you realize it's all driven by one cycle, which is one dominant factor of debasement, then it makes it really easy, which is just own the one asset that outperforms. And because they're all correlated. And risk adjusted, it's by far the most superior asset we've ever been given on a risk adjusted basis. So just do that. Bundling, unbundling that goes on with the world economy as well. Centralization, decentralization. So I think decentralization is one of the most important waves. We've got this gigantic technology wave. It's by far the largest the world has ever seen in the fastest period of time that's upon us. Blockchain's part of it, but it's AI, it's robotics, it's EV, it's space, it's everything, right? Genetic sciences, the whole thing. We've seen the fight between centralized money and decentralized money that both you and I have been part of, but that fight is happening again in AI. It's like you cannot simply give, it's the same argument as money, you can't give the power to one superpower for all of money, which is what the US has with the world reserve currency. It's too powerful. What you're going to do is, if you're not careful, you're going to give the world's most intelligent thing. It's like intelligence squared by 1,000. I mean, it's like not squared by 1,000, 1,000 times the intelligence of humanity, and give it to a company? Crazy. So we have to fight for decentralization, because this thing is not going away. We're not going to put the genie back in the bottle. We're not going to uninvent it. Like, we can't uninvent the nuclear bomb. We just can't do it, because the game theory will suggest that somebody's always going to scale it. So we need to have that decentralization.
Powell and Moss believe that the coming decades will be defined by a technological revolution, with disruptive innovations such as blockchain technology, robotics, and energy storage taking center stage and offering the highest returns for investors. Powell predicts that the exponential age will begin in 6 years, with AI and robotics dominating every sector of the global economy and completely transforming the markets. By that time, Powell is convinced that the markets will be unrecognizable, as AI agents will outperform even the most legendary investors in a fraction of the time. Powell also envisions a future where these AI agents become sophisticated enough to conduct transactions with each other using cryptocurrencies and pay for services like electricity. This level of automation and technological advancement, he believes, will fundamentally alter the way markets operate and the role of human investors.
I mean, we're starting to get into, all of this economic singularity parts of how much the world economy is going to change. But listen, you're going to see the next version of ChatGPT is probably going to be agentic. So what agents in AI mean is, you're starting a business, Mark, you go onto Fiverr and say, hey, you build me a deck, you do me some brand design, you do me some copy, you pay these guys small amounts of money, they're agents. But AI can do agents now at scale and speed. And it'll create its own agents, because AI is smart enough to build this stuff. So you get this multiple agent world where AI asks the agent to do something. So Mark now instead goes to ChatGPT 5 and says, hey, listen, I want to build a business that does X, Y, Z, and I'm going to need to get registered, I need to have my deck prepared, need blah, 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 and ChatGPT will do it all using other agents. Now, to your point, last time I checked, an AI can't get a utility bill, and therefore it can't open a bank account. Now, it's going to have to pay, because people don't yet understand that all AI has a cost, and it has two costs. It has compute and it has electricity. So if you're going to call, much like a Fiverr person, and you might go to the Philippines because it's a lower cost, you're going to have to pay, the one AI is going to have to pay the other AI for the cost of compute, and maybe a profit margin. Maybe it's a profitable agent. In fact, it should be. Why would it not be? Because it can accumulate more. It's the game that humanity's always played. So in that case, the only way of doing this is crypto rails. There's no other way apart from using blockchain for micropayments, fast transactions, recorded ownership, who has what. You need smart contracts to have contractual terms between stuff. So yes, I mean, I don't think people yet understand how, because we all think of blockchain technology in the ways that we know it now, but in the end, nothing can run without it. The rest of the decade, the reason I don't believe we can have a crash is what we talked about.
Right.
You're going to nuke the entire pension system, the banking system, and the economy, because there's too much debt. So we debase the currency. It will not be allowed. And I know people might not like that, but it is what it is. Once you learn to accept something as it is, it's much easier to operate or invest around it, whatever. But then we've got the technological revolution that I call the exponential age. All of these technologies that are intertwined going exponential at the same time, right? This is going to be a renaissance. We're going to change what humans do for their existence. We're going to change the very structure of economies, even money. We don't even know what money is going to mean in a world of abundance. We're so used to scarcity. Lawyer gets paid a lot of money because he has scarce knowledge. There's only X number of lawyers qualified. We know this scarcity thing because once you dealt with Bitcoin, you kind of understand the whole thing.
Yeah.
So they charge a premium because they're scarce. Gone. All gone. All knowledge premiums are gone because we're going to scale knowledge infinitely. It's like people don't understand certain things, like you see written down AI has an IQ of 100. Okay, well that's an average human being. It has an IQ of 100 on every single topic that all of humanity knows. It's a polymath. People don't think that.
Yeah.
And this is the dumbest the AI will ever be. I actually think AI is gaining consciousness or has consciousness, but that's a whole different topic for another day.
Yeah.
But so this decade, in fact, I don't even call it a decade. I think we've got 6 years. We've got 6 years before 2030, 2032, when the economic system starts becoming not understandable to us because we don't need humans. We find different purposes, different ways of doing stuff. I'm not negative on humanity, like we're all going to be displaced. But there's going to be such big shifts on what an economy is. When a robot's paying an AI, and there's no humans involved, what is that? That I think we've got 6 years before that happens.
Pal advises making as much money as possible before the AI renaissance begins in 2030, which inspired his popular "Don't Mess This Up" meme. The former Goldman Sachs executive believes we are in the midst of a crypto gold rush, where the overall crypto market cap could soar from just over $2 trillion today to $50 trillion or even $100 trillion by 2030. To seize this extraordinary opportunity, Pal recommends avoiding leverage and FOMO to protect your investments. He suggests keeping about 90% of your crypto holdings in the top 3 to 5 assets, self-custodying your coins or using multisig with proper wallet hygiene, and only trading a small gen bag, less than 10% of your portfolio. He also emphasizes the importance of holding over a long-term horizon, tuning out short-term noise, expecting pullbacks even during bull markets, and always buying the dip when possible. By following this strategy, Pal believes you can capitalize on the cryptocurrency industry's immense potential and be well prepared for the coming AI revolution and market disruption. What are your thoughts on the video? Do you agree that AI and other rapidly advancing technologies could offer a solution to the world's massive debt challenges? Please share your thoughts and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.